In this video help, I'm going to cover the account ledger. The first question you might ask is, what is an account ledger? Well, in most popular accounting systems, which this is not an accounting system, this is a little bit more. This is a front end for a business and management system. In an account ledger, on an accounting program, what it does is it takes all the balancing of accounts, which should be income and expenses, and it sets up a report and prints out the report for you on the screen. Then you can go ahead and print it to a printer if you need to. Well, let's go to the account ledger and I'm going to explain the difference of how this particular one works. In this screen, which is the account ledger main screen, there is a series of months of entries. You create a new month by clicking the new record button, and then add the month for this particular period. Now, what you're going to be doing is you're going to create a new record for each month. Let's click on the first record up here so I can show you. This was for March of 2014. Now, what you're going to do first after you put the month in is you're going to go to your bank statement, and you're going to take your bank statement and take your statement balance at the end of your last month, and then you're going to put that in there for the current month. What that will give you is a starting point for what your balance should be in your bank account. Now, let me explain. If you change this number for one reason or another during the current month after you provided the information from your balance sheet, you will go to the ledger notes, which you would click here and pop up, and you would explain if you took money out of your balance account that is other than in places where we're going to show, like income, purchase accounts, expenses account, and taxes. If you're going to do anything in those places that are not covered, for example, which would probably be the primary one, which would be expenses, if you did not put something in your expenses and it was covered in another location, then you want to know that that money was changed. So you put it in the ledger notes so that you can, next month when you get ready to put the new balance in for your account, it can add those differences, either income or expense that you changed in your bank statement account. Now, what this actually does up here is on the month basis, you're going to be going to each one of the screens, the purchase ledger, sales ledger, and expense ledger. You're going to do a report that will summarize that period, March, April, and so forth through the year. And you're going to take the total income, the purchase total, the expense total, and the tax total that is in those screens, and then you're going to put those numbers in here. And basically that will calculate from the beginning balance. It'll give you a month-end balance or summary at the end of the month, what your actual gains or losses are. So this is like a running total of the month. Now this differs from the past ledger that I was using, where it only gave a running summary for the entire period, all these rolled into one, and then it gave you something like this total down here, which is the account summary for all the months. Well, in this new reporting system, what I wanted to do was to give you the ability to see each month individually and then summarize it down at the bottom. So for example, the summary for income, the summary for all purchases, the summary for all expenses, and the summary for all taxes would give you this number. And that would be, if it's income and you made money, then you would not lose money. In this particular case, this showed that we had a large discount or negative account balance in that month. In the next month, we gained a little bit, not that much, because we still had some more money. And for the whole 2-month period, we're actually showing a negative of $6,323.03. So from 12,000 down to 6,000, that was some pretty drastic numbers. But I wanted to do that as a demonstration in this screen to show you that that will show the running month net at the end of each month. Now, let me cover some of the other things. When you do a find in this screen, you can do a find for a particular month. For example, if I put in do find and I put in there March, and then do the perform find, it's going to give me the March totals. And that would be all the numbers that we put in for that record. And as you can see now, we have a complete different set of numbers in these values. This gives you the current balance at the end of March based on the numbers that were provided within these fields up at the top. And the same thing would go for a larger period of time. Maybe I wanted to do a range where I could show a different month or a set of months. Now what I can do is I can go over here and show all months. And now if I were looking at, say I don't want to see March and I just want to go ahead and see April, I can also do this and it pops up the month of April. And in the same way, when you do an omit record, you could take out, say, some of the records or all the records by just omitting those different records. Then you can reverse that to see the prior month. I would bring this back up and I'd see March again. So what you're seeing here is March, and then I say omit the record, and they're all gone. To show them all again, show all would bring them all back again. So this is the April, this is the March. Now what I'm going to do is I'm going to ask you to take the next video at the top, which is going to show how you get the summary totals for purchase, sales, and expenses. So that would be the next thing I'd like you to do. Thank you.